Much for the lovely introduction. I always love these sessions because, markets are difficult, right? Markets don't spare you if you don't perform. But in these sessions, you're always given a very nice introduction even before you've started. So that's something which is not so hunky and dory when we are talking about markets. But then let's start the session. So what I'll do is I will briefly share a lot of things which believe are very simple to do in markets, but people are not able to because their focus is on a lot of noise. For example, currently, the Russia-Ukraine war is the noise that is happening, right? So there have been many phases in the market where the market has provided us opportunities to invest, but we've just thrown them away, not trying to figure it out that what the opportunity in the stocks are, but worrying about what's happening around in the whole world, or maybe in the Indian market, or maybe with the macros, what the RBI is doing, or what the crude oil is behaving, and things like that. So I'll just share what as an approach we follow, and you also can follow. It's not that difficult. I'll try to keep it very simple and less jargon, so that everyone is able to follow, because I'm not sure the background of the people who are joining are from the financial fraternity or not. So starting with the first categorization, when we talk about stocks, it is about whether you're talking about a small cap, mid cap, or a large cap, right? So the connotation, or the you can say meaning of these have changed over the years, right? And there are various companies which have gone into from a small cap to a mid cap and then a large cap, and there are many companies who've fallen from a large cap to a small cap, right? So this keeps on changing, but to briefly understand, the first 100 companies, the topmost 100 companies in India, they are the large caps from market cap. So when we are talking about the top 100, it is based on the market capitalization. What do you mean by market capitalization? It's nothing but the overall number of shares of the company multiplied by the market price of the company right now. So it in simple sense is the market value of the company overall if you want to buy it currently. So the top 100 companies based on the market cap are the large caps. From 100 to 250, that is the next 150 companies, they become the mid caps. And from 250 onwards, every company is a small cap, right? So this is very relative, because you cannot say that a 5,000 crore company is a small cap or a mid cap. You have to basically ascending order, you have to have them, and then you can categorize. But generally speaking, the companies above 50,000 crores currently would be all large caps. Companies between 7 to 50,000 crores would be mid caps, and below 7,000 crores might be small caps. You can roughly assume that. So when we are talking about these classification, we have to understand that wealth over the years have been made by a lot of smart investors by actually investing in small caps and not in large caps, right? The general notion that people have, and that's why I want to cover this topic in detail when we go ahead, is that people get scared that we should not invest in small caps, or they are very much concerned that what would be the quality of the business or the quality of the company if it's a small cap. There are a lot of people who think that these are chore promoters and they'll not be rewarding them with good dividends and things like that. But history has proven again and again, not just in India, but also in the US, and also in Australia, and also in Europe and elsewhere, any market, that the big billionaires or the biggest investors in the world, they started entering or investing into companies when they are small, and rode the whole journey till they became the large caps, right? For example, our very own investor Rakesh Jhunjhunwala, who's known as a Buffett of India, he bought Titan when it was not a large cap, right? He bought Titan when it was a very small cap, in fact a micro cap, right? And it then became a large cap. So that's what the wealth creation story of maybe Rakesh Jhunjhunwala has been, or maybe also Warren Buffett. He bought Coca-Cola not when it was a large cap, right? When it was a small cap, and then he rode it all the way and still is holding Coca-Cola in his Berkshire Hathaway as an investment. So over the years, we have seen these large investors, their patience of holding on to companies over a longer period of time, rewarding them. And these companies generally are in the smaller or the mid cap categories. And the point would be proven later in the presentation when I'll be speaking about in Indian context also, that all the new and niche businesses generally are from this category, and then they go on to become large cap as and when the business develops or unfolds. A second very important thing that I want to talk about today is that generally when we are speaking about the markets, we are discussing a lot of things which are related to financials, maybe a lot of jargons which financial experts might be talking about. We switch on to the CNBC channel, and there are a lot of experts that come around on the TV and they speak about what's happening with a particular sector or the economy or the world markets. All these things generally over the long term don't matter. What matters is the company that you own. It is run by which kind of entrepreneurs, and whether the entrepreneurs have the drive to make the business big or not. And understanding the history of or the background of the promoters or the people who are running the show and the business that you're owning, if these two understandings you have, you can make a lot of money even if there is a world war, right? And it has been proven in the past. The world has survived 2 world wars already, right? People might argue that we might not survive a third one because of the nuclear weapons that the world has, but that's what stops people going for the third world war. Just imagine, why didn't we have the third world war? Because all countries are scared by the weapons of the mass destruction, right? So the point is that if the business is having certain strengths and the entrepreneur has competence, generally they are able to survive over longer periods of time, and that is where the maximum amount of wealth is made. And when you're thinking from the entrepreneur's perspective, you're not looking at the next quarter or the next month or the next year. You're thinking about 5, 7, 10 years, right? And if whoever is joining, if you 10 years ago thought Maggie as a brand was such a wonderful brand, or maybe if you had figured out that Royal Enfield, the bullet that is becoming a very big brand, you would have made tons of money, not by looking at the quarterly numbers, but just realizing your own purchasing behavior, right? What you were buying and who were the people behind. See, when Eicher Motors, which was now, Siddharth Lal now, runs it. When it was run by, his father, maybe, that was not doing that well. But when Siddharth Lal came into the business and he turned around the company by building a brand in motorcycle, which, India had not seen for many, many years, Royal Enfield became Royal Enfield that we know. And that's where we've seen over the past, multiple decades, that Narayan Murthy comes and changes the whole way the IT sector is run, or there are these great entrepreneurs which our country has been blessed with, and following them can be far, far better or far more remunerative than following these TV experts, or start the money control every day in the morning and look at what's happening around the world markets and get concerned if the world markets are down, and be happy if the ticker is up. And that's where we believe that that's been our philosophy, that we've always followed these entrepreneurs which over the years have proven to be very profitable for us. And I'm going to share just briefly about these two entrepreneurs, Mr. Shivar Kheruka from Borosil Renewables, and Mr. Himanshu Patel from HLE Glasgow. Now these are companies which you might have not heard of, right? But I guess Borosil is a company that you all might have heard of. Borosil has a company called Borosil Renewables, which makes solar glass. And it is the only company in India which makes solar glass, right? All other, requirements of India were imported. And over the past decade, the business was set up way back in 2010. And for 10, 12 years, the business just struggled because it did not make meaningful margins, because the Chinese were just dumping their glass into India. But if you followed what the Kheruka family was doing, and if you had seen their overall grit of being in the business even after such a long period of negligible or no profits, you would have realized that in the whole world, the Chinese just destroyed every other solar glass manufacturer. I mean, only two plants in the world survived the onslaught by the Chinese over 2010 to 20, which two plants, one was the Borosil renewable plants in India, and there was one plant in Europe. Rest all plants just perished. And that is what, the grit of the management was very visible. And they just didn't survive. But when given the opportunity way back in 2019, they expanded their capacity when they thought that now is the time when we can increase our you can say foothold, and we've in a way survived the onslaught of the Chinese cheap imports. And now, because China itself was ordering a lot of its glass factories to restrict production because of pollution problems, these entrepreneurs thought that it is now our time to shine and maybe come back in the market. And at a very appropriate time, they came up with an expansion. Now, if you look at in 2019, there was no background, that there was no hope even that these guys could have made profit, but still they put up 200 to 50 crores for expansion, just hoping that the market would turn better for them, and the Chinese competition they'll be able to take on with both hands, given what was the Chinese government saying. And it was still on hope. But what happened post the pandemic was very, very interesting, that the Chinese imports started to dwindle, and these guys got an opportunity to mint money like anything. And from the cash flows that they minted during that time, they announced another capex. So this company was having a capacity of just 180 tons a day, right? So they were just making 180 tons a day, and they announced a capex which took their production to almost 450 tons a day in 2019. In 2020, they announced a capex which will take their production to 1,000 tons a day, and now in 2021 they've announced their plan to take the production to 2,000 tons a day. So just imagine a 10x kind of production growth in a matter of just 2.5 3 years. I mean, which companies you've seen growing that fast in a manufacturing business? This is not, a IT business which can, grow so fast. So that is where, the long patience or the grit of the management got rewarded when they, seized the opportunity of expanding. And now we have a renewable giant emerging from India, a glass manufacturer with the European, countries are also looking forward to, because they don't want to rely on China, right? And this company is getting a very strong feedback from its European counterparts that if they can expand their capacities fast, they have a ready market in Europe which would want to buy the solar glass from them. And this is a business which is very difficult to start, because it's a continuous process. You cannot shut the line even for a day or two, and you have to maintain the thickness of the glass, because the glass thickness has been reducing over the years, and you have to make sure that there's no breakage also. So people might think that glass is such a simple business, right? What is there in a glass manufacturing business is a commodity, right? But you'd be surprised to know that in China you have two players, Genie Glass and a flat glass, who are almost 55 to 60% of the world market, right? They become such large players, right? So if in India, if there can be a player, and the solar manufacturing is going to be concentrated in these two countries only, that's very clear. It's India and China, because no other country is making any meaningful efforts to increase their solar production. They're only buying solar panels. They were buying it from China, and now with the PLI support of the government, we can hope that a lot of manufacturing would happen in India, will not just suffice our Indian markets, but also try to supply to the world markets. And you're seeing giants like Vari and Vikram Solar emerging, which are making modules just not, or making capacities just not for India, but also trying to tap the export market. So that is where we believe, if you follow simple stories, renewable was not a story that people, put doubt, right? There was simple data that was evident that all countries around the world wanted to decarbonize, and there'll be a big push into solar. And if you looked around, there would not be any other business that you would have identified in India which would have done very well, because all these businesses have struggled hugely over the past decade. But the people who survive, like a Borosil Renewable, they have a very good chance of having a decade that they had not seen for the past 20 years maybe. And that is where, if you did this simple analysis of the promoter family, their background and the business, and just simply understood that for the coming 1 decade, solar PV modules are going to be the technology that will drive the renewable push, it is, you're set, right? You need not quarter on quarter worry about what's happening with the world, with India, with the industry, or with what the foreigners are buying or selling Indian equities, or Russia Ukraine war, or any of those sorts, right? Similarly, there was a trend in chemicals way back in 2016, and where HLE Glasscoat, which is a company which used to make these glass line equipments, did very well, because all chemical and pharma manufacturing requires a glass line equipment which is used as a reactor to mix all these materials. It's a steel reactor which has glass lining inside. It's a specialized reactor, and there are only 4 players in India which made that, and HLE was the second largest. And what happened is that in the pandemic also, you would have realized that the whole world was dependent on how much supply of vaccine they will get from India, right? And that's what the capability we've developed over the past 10-20 years, that a lot of chemicals and pharma formulations and vaccines are being supplied from India. And all these companies, be it a Divi's Lab or these huge pharmaceutical companies like Sun Pharma, or chemical companies like Atul Limited or Aarti Limited, when they have to expand, they have to put up a glass lined equipment or a dryer and a filter. All these three are critical components or machinery which the HLE Glasscoat family business was providing. And that was where huge wealth creation happened, no matter what happened with COVID, or no matter what happened with a lot of other stuff that were happening around. So our approach, why I wanted to give this example is that our approach has remained. In fact, if you come to our office, we have photographs of these entrepreneurs and investors whom we consider our gods, right? In fact, because we thrive because of them, right? We are not concerned what they're doing or a quarter or 6 months. We are concerned with what they're going to achieve over the coming 5, 7, 10 years. And that is where we believe concentrating your portfolio around those kind of businesses and promoters would create a lot of wealth if you were to. And that is where we also believe that sometimes there is a lot of chasing of momentum, or people want to enter into sectors which are the most talked about in social media or in the newspapers or from the news anchors. And that is where we believe people make the biggest mistake of entering into wrong sectors, right? We've all had a Paytm in our portfolios, right? Which just keeps on falling, right? Which has no bottom, it seems. But why does it happen, right? Why does it happen that such a good company or such great businesses don't do well? And why do they crash? The simple reason is that whenever or any company which is at the front foot of innovation, they're the worst businesses to invest. You will say this is contrary to what the general consensus is, right? Because people would believe that we want to buy businesses which are at the forefront of innovation, right? But it is least remunerative to buy those businesses, because companies which are at the forefront of innovation also are companies which are going to be disrupted first. And that is where, when I'm investing, I don't want companies to get disrupted fast. I want companies which can stay put for a longer period of time and maybe benefit by supplying something to the innovators, right? And that's where over the years we've made an approach of following what is happening in the high tech or the new technology or these high flying technologies, but not investing them in directly, but indirectly finding companies to invest in them. And you'll be surprised to know that Buffett, in fact, in his last year's AGM, shared that automobiles, which literally changed how we travel, right? It was such a big innovation. And Henry Ford, right, is a company which became a company that people admired around the world. But at the start, there were around 2,000 companies in the US which started the automobile business way back in the 30s. And by 2009, there were only 3 companies which survived. 1997 companies disappeared. Just imagine. And we are talking about electric vehicles, right? And I'm sure that in India, there'll be close to 1,000 startups which will be into, either providing a battery or making a two-wheeler or making, a electric bus or things like that. You can be pretty sure that over the years, 997 would disappear. Only 3 would survive. Now, what are your odds that you will select the 3? So very, very difficult, right? And people want to, play against that odd. And that is what we believe is gambling, because how much ever intellect you have, you cannot win when your odds of winning are 3 on 1,000, right? So that is something which you're playing against yourself. And that is what is a common mistake. And in fact, Buffett shares that take whichever innovation, the top 100 telecommunication companies, they are not there in the world. The top, 100 companies or the first 100 companies that wanted to build an aircraft or were in the airline business have gone out of business. So it is not, that you have to find the biggest innovation in the world and try to invest in it. You have to find companies which would survive over multiple decades and are into a product or service which is actually growing at a faster rate, but it is not at the forefront of innovation or not getting disrupted anytime soon. That is where bulk of the money is made. And when we're talking about, solar, as I talked about in the last slide, why we took Borosil Renewable, because for the past 30 years, whatever has happened with the solar module, whatever has happened in the cell or whatever technology around, the glass has remained. The glass has not changed. And that is the least disruptive, element of the solar panel. And that is why we were more focused on, a company which was into solar panel. And the company was just 300, 400 crores market cap, has become almost 7, 8,000 crores market cap, right? And all other companies were not able to achieve, the high flying technology names were not able to grow at that pace, 20, 30, 40x in a matter of, 4, 5 years, which this company was able to achieve because of being in a product which was non-disruptive, right? Similarly, when we talk about electronic vehicles, people are talking about two-wheeler companies or four-wheeler companies or battery management system companies, things like that. There is a simple company which makes a very simple product which goes into, the electronic vehicles, and all EV manufacturers, be it Tesla, be it a Maruti, be it a Ola Electric, be it a, Hero Electric or Bajaj Auto, would require this component. And there's this only one company in India which makes that component, which is a shunt resistor. So your battery management system requires a normal shunt resistor, which would supply the power adequately to your, vehicle, so as to make sure that your battery has a longer, shelf life and doesn't go away. And that component manufacturing company was ignored by the market because they thought इसमें क्या innovation है, इतना सा तो product है, shunt resistor तो कोई भी बना सकता है, इसमें क्या innovation है. But if you look at the battery, the whole battery can get disrupted by, newer innovation. New battery can come, more efficient batteries would come. Whether Bajaj would win the electric two-wheeler business or Ola would win, there's a big debate, right? If I put a gun on your head and ask you, tell me one company which you believe would win this two-wheeler, electric two-wheeler race, and I don't know. If you're able to predict, good luck to you. I'm not able to predict. But I'm happy owning Shivalik Biometals because that's a company which will be supplying to whoever survives this race. And in the process, whoever are still competing, he's providing to everyone. And that's one thing which will not change in the battery management system for a long, long period of time. And that is where, if you look at the performance of the auto index or all these big automobile companies, they have done nothing, in fact, over, the past 2 or 3 years. And this company has gone on to become a 4, 5x. And that's where, we believe it's still expanding. It's, making 3x its expansion. It is still adding customers, and it's has a client in US, Vishadale, which supplies to the likes of Tesla. And also, there are only 7, 8 companies, in fact, in the world who are making shunt resistors. So the more the two-wheelers and the more the battery management systems or four-wheelers being used, the more, shunt resistor being consumed, and the more business for these companies. So why I wanted to, talk about these companies was that is the way you think about investing into markets. Find products which are non-disruptive rather than becoming a hero on predicting what will happen over the decade or over the 5 years and which will be the companies who will be the winners. Find sectors or subsectors which will not get disrupted, and within that then go for a leader who is, a large player and has a good promoter and has a lot of, growth ahead of itself. And that is where we advise that we invest in small and mid caps, because if you think of, people say that these small companies would, just go away, who we don't know, these smaller companies can shut down anytime soon. I am not telling you to buy these smaller companies just for the sake that they are small. I'm not telling you that in India, if there are 100 manufacturers of a, steel, you buy the 100th company which is making steel. By small and mid cap, when we are talking, we are trying to tell you buy category leaders, but these categories, because these businesses, like for example, a shunt resistor business, the whole market, if you add, it will be just a 5-10,000 crore market. So if the whole market sales can be just 5, 7, 10,000 crores,
You cannot have a company which is 1 lakh crore in that market, right? So by definition, a shunt resistor company can never be a large cap. But if you want to go to a large cap, you have to buy an electric two-wheeler or electric four-wheeler, and those companies can get disrupted. And those companies, in fact, sometimes are discovered also. A price has already taken them to their success, right? In fact, if they're successful, they've already are a 1 lakh 2 crore or a 3 lakh crore market cap. And growing from there is difficult because everyone knows the story of what is happening in Infosys or a TCS, right? Everyone knows what the great story of HDFC Bank is there. I'm not saying that you should not invest at all in these companies, but what I'm trying to tell you is that if you believe that you invest in an HDFC Bank or an Infosys and a TCS right now, they can grow at 30-40%, then you're fooling yourself, because they will grow at 10-15% at max. Banking in India is still, less penetrated, so maybe an HDFC can still grow at a higher rate, but other businesses, large businesses, have to, slow down because their base has become so big. So when the company is growing at 10-12%, how do you expect your portfolio CAGR to be, 20-30%? It cannot be. So if you're targeting that my CAGR over the years, over the longer term should be 15-20%, then you have to bet on niche businesses which are growing at a faster rate, currently are ignored by the market. And that is where you as an individual investor have an advantage. In fact, Buffett tells this in all its letters initially, that institutions are at a disadvantage and individual investors are at an advantage. Why? Because institutions, or think about an LIC or a big mutual fund or a large corporate, they can only buy, because of their huge money that they have, they can only buy a larger companies like Infosys, and everyone is buying them. So think about the price that have gone up just because of the buying. Forget about business fundamentals. But you as an individual investor, there is no compulsion because your kitty of money is small, no? You can find niche businesses which, like Borosil Renewable, are the single, solar manufacturer in India, and they are being ignored by the institutions because if they put their money into, they have to buy the whole company, and the promoters would not sell the whole company, right? So you find these entrepreneurs who are growing at a faster rate, and you as a small shareholder has an advantage over the institution to become partners with them. These large institutions would not become, they will only become partners when a Borosil Renewable becomes 50,000 crore company, right? Because then they will be able to put in the money that they have in their kitty, because a large mutual fund would have 1 lakh crores of assets under management. And even if it wants to put 4-5% of its kitty in a single company, that means it will have to put 4-5,000 crores in a single company, right? And 4-5,000 crores, if a company is 10,000 crores, then he'll have to buy 50% of the business, and no promoter would sell 50% of his business, right? And this is what I want to reiterate, that please don't think that institutions are at an advantage, they're at an information advantage or whatever. These days, information flows in at the same time to everyone, right? So you as an individual investor are at a bigger advantage in terms of your size, and you now have the information also symmetric. So I guess this is one of the most wonderful time to be investing into the markets, because in India we are seeing a lot of these small and mid caps having good corporate governance, niche businesses. They don't have institutions chasing them, and hence they sometimes are available at a lesser price than what they should be trading at. And if you have a time horizon of waiting out 5-10 years and seeing that its companies become large, and then the mutual funds to come and buy them, is what something can be extremely rewarding. And that is what happened, right? D-Mart, when it came up with an IPO, it was the only company in India which had in fact cracked the recipe for selling groceries in, or being a retailer in India. But that company, when it came up with its IPO, its market cap was small, it was not a large cap. Now the company has become almost a large cap, right? Now people want to invest in D-Mart. Why not buy the company when it came up with its IPO when it was very small? In fact, I'll just have a table where a lot of these companies which came up with an IPO over the past 3-4 years, these are niche businesses, they are category leaders, and they are only one company in their domain, but still people chased large companies when they should have been going after these smaller companies, right? So a company like an IRCTC, for example, you have only one company whom you can go and book rail tickets for, right? So there was a no-brainer kind of business, right? A company like Dixon Technology or CDSL, these were companies, there are only two depositories in India. If you want to open a demat account, right, in our country, there are only two companies with which you can open a demat account, which is either CDSL or a NSDL. You will say we open an account with Zerodha, right? So Zerodha and all these are brokers. So whether it's Grow, Zerodha, whoever, the end demat account is either in NSDL or CDSL, which holds your shares. And there was a clear advantage which CDSL had, that it had Zerodha as its client, and most of these discount brokerages, which were growing at a very fast pace, as its client grew, it was very clear that CDSL would grow. But when CDSL came up with a market, an IPO, its market cap was, meager 3,000-4,000 crores, which went up to now, almost 15,000-16,000 crores. But that was which it was ignored by the market till it reached this market cap, and now people are talking about CDSL, and mutual funds and institutions want to enter into CDSL because it has become a big business, right? So that's where, having the patience always helps. Just imagine a company called Dixon Technologies, which is a direct beneficiary of the government's push towards contract manufacturing of consumer durables. All the mobile phones that, we are seeing, that most of the companies around the world are talking about shifting the production in India. Dixon is a primary benefit of this wave. And you might not have heard about Dixon. You might have heard about Voltas or these bigger brands, but Dixon was an incumbent which was into a space where, a lot of growth was coming. But in 2017 it was still a small business, right? Just 2,000 crores kind of a business, but its sales have increased to almost now 10,000 crores. In fact, just in a decade, from 500 crores to almost 10,000 crores has been the story of Dixon. In fact, has been the story of manufacturing of mobile phones and these consumer durables in India, where a lot of foreign companies want an alternative to China, right? And that's where these kind of winners have happened, right? In fact, you look about a company called MapMy India, which has recently got listed, and that company has almost 98% of the Indian data of maps. And in fact, it was started before Google Maps, right? Way back in 1995. And that company has, and the Indian government doesn't allow foreign companies to have the last mile data, which is the advantage that MapMy India has. And 3D map and, coming a lot of technologies in your automated driving. And if you think about future of automobiles where autonomous driving would be big, MapMy India is the only reliable solution for all auto majors, because that's the only company which can provide the last mile communication between the maps with the infrastructure or within vehicles, because foreigners are not allowed to do that, right? So these are the kind of businesses which are in the small and mid cap category, and that's where um, uh, uh, we are more concentrated. So I'll just briefly run through Borosil Renewables. We've already I've covered in briefly when I was talking about the story, and the global money was chasing the renewable sector. How I identified, or how we at Niveshaay identified that, was because in 2020 and 21 we were looking at a lot of these foreign funds which were committing a lot of capital to renewables, and a lot of these subparts, as I talked about, there were so many subparts that are there in a module, but it was only the glass whose prices had not crashed over the past 20 years. You take any component, be it polysilicon wafer or your cell or any other module component, everything had crashed over the past 10-20 years by almost 50, 60, 70%. And that's where the disruption had happened. But in glass, that had never happened. And that encouraged us to look at the non-disruptive glass business. And if you look at what was happening, was that renewables were growing at a very fast pace. Whatever new capacities around the world were being made were of renewables, coal powered power plants. By 2040 it was predicted that your renewable would take over, the solar PV would take over the coal fired power that we have, which is currently 70-80%. And it will go down to maybe 20, 30, 40%, and solar would take over. So these are the kind of, you can say, data points that we looked at. And the government's thrust also in India, where the government now wanted solar modules to be made in India because they were seeing the reliance on Chinese, right? All the projects that were there in India, 70% of the modules were being imported from China. And that was what a data point that the government was not comfortable with. So come 1st April 2022, there'll be a 40% custom duty which is going to be slapped on these solar modules, right? And that is where this basic custom duty would make sure that no cheap imports are coming to India, and we have our domestic manufacturing, which has a lot of in fact expansion going on. All these people are going to benefit more than the foreign players. And that's where, when we look at the whole cycle, in the last 6 years, the renewable capacity in India has almost gone up by 15x, right? Just a 2.6 gigawatt capacity in 2014 had already gone up to 38 gigawatts right now. And in the coming 10 years, it is going to go up 8x more. I mean, which other sector you have such growth? Every other sector is growing at what, 10% or 8% or 7%, right? These huge multiplier growths are seldom in a sector, and when you have a large, you can say, beneficiary of that sector, you should not miss out, is what we also try to find out in the solar glass industry. And other trends like bifacial glass or bifacial solar panel is where glass is attached on both the side instead of just the top, because the reflected light is also captured from beneath, and that increases the modules power capacity by 15-20%. That reduces your land requirements, right? And also improves the life of the module from 25 years to almost 35 years. So that was a trend which caught up in China, very, very, very nicely way back in 2020-21. And now around the world, this trend is catching up, which makes, the consumption of glass go up even faster, because now glass would be applied on both sides of the module, right? So, you'd be thinking around that, how we can identify such stocks, or what. So the point is that you have to think that what is your industry, or what are the industry of the people whom you're interacting on a daily basis. And Peter Lynch has very beautifully in his book described that he has always benefited by buying companies of brands which his wife used to buy products for, or companies whom he was a customer of, right? So it's very, very simple to identify companies or sectors which you are maybe having an advantage in terms of the data that you might be tracking, or the products that you might be consuming. And that is what the starting point should be, right? Always look at companies which you are a consumer, or maybe you're working. It's very, very insane that Borosil Renewable, right, was a company which was from solar sector, right? And I had these friends of mine, in fact, who were in the solar business. They were manufacturing modules and they were buying solar, glass from Borosil Renewables. In fact, they explained me the whole story, how Borosil Renewable is going to mint money because the Chinese imports have become so expensive, and they were relying more on Borosil Renewables. And I kept on telling them, why don't you buy the stock of Borosil Renewables, right? And they just did not buy. It is very insane that history has proven that a IT employee who's working in his own company is not investing in his own stock. If 10 years ago or 20 years ago, someone invested in TCS while working in TCS, he would have been far, far better at his time of retirement rather than just his salaries, right? But people don't do that. And that is where it's human psychology, and which has been proven by great investors, by like Monish Pobrai, which speaks about that people want to go the harder way, right? They want to buy something which they don't understand because that fascinates them. They want to invest in a EV company and not invest in a software business. They will invest, a renewable energy guy would invest in an oil company and not invest in a renewable energy company, because he's more fascinated with what's happening with the oil prices in the world. He knows his business very well, so he thinks, I have a grip, and hence he has a lot of inhibitions of not entering into it, which is completely insane. Find your circle of competence, things that already know, and invest in those businesses which you can easily get a grip on, because of being a consumer or working in that sector, or having relatives or people whom are into that business, and you can track very closely, right? So if you are from Bangalore, if someone is from Bangalore, you might have seen that what was happening with the real estate market, right? Or the growth story of a lot of startups is from Bangalore, right? So there's a lot of things that go around your vicinity, but sometimes people just tend to ignore. I mean, if you were in Bangalore, and if your demand for a bigger house increased in the pandemic, then buying a Shobha developer was the first thing that you should have done, right? And if you're from Bangalore, you know the construction quality that Ashoka has, right? You would know that how the builders had suffered. And if there were 30, 40 builders in Bangalore, they had shrunk to just 5, 7 in the past decade. So just imagine, you had lesser players having more business, and that was what you could have easily, invested and benefited out of. But 100 rupees Shobha went up to 800 to 1000 rupees, a 10x move. I don't think real estate prices went up by that much, right? So people invested in a real estate. People bought, maybe bigger villas or bought bigger houses. I have a lot of clients in Bangalore whom I know have bought bigger villas, but when I talked about, Shobha, they were very reluctant earlier, eventually invested, but then, people are very wary of investing into simpler stories which are, in their vicinity, right? So if we are talking about EVs, another company which is, comes to our mind is KPIT, which again, is a company which is, directly beneficiary of the EVs, but at the same time, not at the front foot of the tech, or not at the front foot of disruption, right? So what KPIT does is that it provides an infrastructure for a Volkswagen or a BMW to start their EV, right? So if the EV made by a Volkswagen or a BMW doesn't do well, KPIT doesn't have any responsibility or doesn't have any loss. In fact, for creating that infrastructure or giving that middleware of connection between, the softwares and how the production should happen, KPIT has fixed term contracts or fixed price contracts which it is able to get revenue of over the years, no matter what the end product does, right? Or think about a Map My India, where it is going to have a fixed revenue if people are using more connected vehicles or automated driving, no matter the end automobile companies make profit or not. So these are simpler stories which, you could have looked at, or you could have, found if you would have maybe, CDSL, as I talked about, only two companies in India who have depositories. So, the number of Demat accounts, if you look at just 1 crore Demat account in 2015 August, right? By Jan 20, it took 5 years, right? 5 years for additional 1 crore Demat accounts to come to India, right? The next 1 crore Demat account just came in a year, just a year, just imagine, right? So that's the kind of growth that was happening in the opening up of Demat accounts post the pandemic, right? And that is where the simplest of simple story was owning the stock of CDSL, right? Because the more, so CDSL's business doesn't get affected if stock prices go up and down. It's a fixed business, right? Because it has a Demat account where it charges annual, 100 rupees or 150 rupees to all the people who are opening up a Demat account, which someone has to pay to CDSL. It's a company which is opening up an electronic Demat account. So even if 1 crore more Demat accounts are being opened, there is no incremental cost that CDSL has to incur, right? But it is getting incremental revenues. At the same time, if these number of people who are going to be added, they make a profit, loss, whatever, CDSL is going to earn its fixed income, right? Every security that is being bought and sold, 10, 15 rupees CDL charges for the pay in and payout. So I can't think about a business which has such a simple, you can say, operating leverage, that we say that more the number of accounts, if your sales double, the profits quadruple or go up 6, 8 times, because doubling of sales doesn't mean your costs are doubling. So for example, CDSL was doing 100 crores of business and its cost was 40 crores. It was making 60 crores of profit. If its sales double, it does 200 crores of business, its costs hardly go from 40 to 50 crores. It doesn't go up to, 80 crores. So its profit goes from 40 crores to 150 crores, right? There's almost a 4x kind of a profit growth by doubling of sales. These are the businesses. And then people get surprised that, CDSL was just 100, 150 rupees stock. Why it has become 1500 rupees? Because the business has done so well and the profitability has done so well. And there is virtually no competition because by law, you have only two depositories in India, right? Companies like Radico Khaitan, right? If you look at the trends, right? This company launched great products like the Rampur, single malt, or the Jaisalmer gin, or now, the Royal Ranthambore and things like that. 8 p.m. is the famous brand, Magic Moments, and all these brands. Over the past 7, 8 years, if someone would have seen this company year after year has launched brands which have become successful, and you could have easily seen that if we look at the per capita income or the youth, which will come in the drinking age, right, or the coming decade in India, these are the businesses who will have a huge multiplier in terms of sales. Because I come from a Marwadi family, and I know that alcohol consumption during marriages, which was considered as a taboo just 5-7 years ago, has almost become normal. Now people don't talk about it, but there are at least 5-7 rooms in the resort or hotel, wherever you're talking, where groups which will come and drink. I mean, the elder, part of the family will have a separate room. The younger people would have a separate room. The groom side would have a separate room. No one would talk to each other, but just unsaid, practice that has started. So this is something, if you look at, is a consumption which is not going to be affected, right, by whatever is happening with the economy, whatever is happening around, because this is a trend which over the years, if US, which capita income, people consume better alcohol, people consume more alcohol, and that's what is going to happen in India. In fact, has happened over the past 4-5 years, and such businesses do exceptionally well when that is so strong. So that is all. I guess I took a lot of your time in discussing these simple ideas, but that is what I wanted to impress upon, that investing is not that difficult. Just look around. Stories you will find which are investable, companies you will find which have strong brands, and you will gain immensely if you stay with them for a longer period of time. Thank you so much. Be happy to address. Maybe Sanjeev, we can go ahead with the questions.
Yeah. I think this was great, Arvind. Like that, you told the story about software developers. Even I was not aware. I'm living in Bangalore. I was not aware of this. But yeah, great. So I think we'll start with the first one. So what differentiates a good small cap stock from a bad small cap stock in India?
I lost your question. I guess there was a connection issue.
Oh, sorry. So I asked what differentiates a good small cap stock from a bad small cap stock to invest in.
Wonderful question. So as I told you, first, don't go to a small cap just because of the company is small, right? Don't buy a 10th or 20th steel manufacturer in India, right? You go to a business which has a niche business opportunity like CDSL, which are only 2 players in India, because the D-Mat account business is just 100-150 rupee business per account. The overall business size is small. Hence, the overall business size cannot be more than 50,000 crores, right? Hence, the company that operate into that can be either small or mid cap. They cannot be large cap, because the overall business. So if the business is 10 lakh crore, then don't buy a business which is 5,000 crore in a 10 lakh crore market, because there's a marginal player which would get killed in a bad cycle. A bad small cap stock is always a stock which is a marginal player in its market. Has a promoter which has a very bad history in terms of not paying taxes, having many cases against him, not repaying bank loans, changing the names of his companies 10 times in the previous 20-30 years, just coming up with new ideas again and again, not sticking to his business, things like that. So there are simple things, right? In fact, there's an analyst whom I sent to attend an AGM, and only on one parameter I rejected the company. He told that the AGM was to start at 10 a.m. It started at 10:15. I told, we will not buy the stock. Why? If the promoter doesn't value the time of his investor who are meeting for the one time to the company, I'm not buying that stock. So you have to have a lot of these nuances which no book can write about. Only over time you can observe good entrepreneurs, and then you'll get a sense that good promoters do these activities. They take less leverage, they are more conservative. It's a very big confusion. People think good promoters are very aggressive. No, they are the most conservative creatures on this planet. They will be very safe in the things that they plan. They'll not want the business to go out of their hand. So they'll take less leverage, they'll be very conservative, they will be non-disruptive businesses, they will have family values which would be above. They'll be people who believe in luck. They will be people who don't boast about themselves. They believe in God and luck more. These are common things that we've found. Because when you're buying small businesses, your exit is decided by people who are running the show, right? You're not in an institutionally owned company where the liquidity is so high that one time you get in and the next day you can get out, right? You have to wait over the years when the business develops, becomes big, and then only you can.
I think Arvind, my internet had a problem maybe.
Okay, I just lost, I guess, for 2-3 seconds.
Yeah. I'll add you again. Wait.
Is that my question? Was it answered? Could you hear what I was speaking?
Yeah, I think till then you're talking about like, following the entrepreneurs, like figuring
Yeah.
out like,
So
hey,
yeah, figuring out what they are doing in their personal lives, what history they had, whether they took a loan and repaid it or not, what kind of family values they have, what their children are doing. A lot of things are communicated by the way a
hmm,
family is organized. If the family is organized, they will have an organized business, right? If the family is disorganized, they cannot have an organized business, right? These are
yeah,
subtle things. I mean, you have to be very choosy and you have to reject businesses right, left, and center. Don't be impressed by people, right? He gave a good interview, let me buy a stock, right? He did
yeah,
this thing
yeah.
good, let me buy the stock. No, that should be the last decision after doing a
Hmm.
lot of due diligence.
But right now, what are your viewpoints on the economic, social, and global trends shaping the investment industry globally, and uh, even the Indian markets, and how the future looks like right now?
So as I told, it doesn't matter what the economy is going to do. See, alcohol consumption in India in the coming decade is going to go up 10x. It's the only thing that I'm focused. I want to go and buy Radico Khaitan because it has built brands which are becoming very big, just not in India, but also export market it is going to tap. I know its expansion plans. I know what it is going to do with a lot of its, plans that it has. I know the family, how it has grown. I know how they have reduced the leverage and things like that. What I'm trying to tell you
Hmm.
is a company like Relaxo, which makes simple
Hmm.
chappals, right? Right. So do you know what's the margin on a Relaxo chappal is just 2 rupees on a single chappal. But the
Hmm.
volume that Relaxo makes, right? It has gone up 20x in the past, five,
Hmm.
7 years. It has not
Hmm.
mattered what has happened globally. It has not mattered what is happening in the Indian market. You'll always have 10 to 15 good entrepreneurs and good companies in India which will do well. Hence, you have limited time, right? If you have a limited time and you go and read what the RBI governor is saying, and then you go and read what the European central banker is saying, and then you go and read what Jeremy Powell in Powell in US is speaking, what is happening with Russia. See, if the Russia thing Ukraine escalates and there's a nuclear war, as and if that doesn't happen, companies would keep on doing their businesses normally. So you have to look at, see, like pandemic, it changed the way how businesses are going to be done. That is a very
Yeah.
important thing to do. So you are going to do a lot of things online. That is what happened post the pandemic. We are on this platform because of pandemic, right? We
Yeah.
couldn't
Yeah.
have imagined that so many things would be happening online, and
Hmm.
lot of events would be happening online. So enablers of these platforms have a
Hmm.
business for many, many decades. These habits are not going to change, right?
Hmm.
These habits are going to remain for a long. So things that change human habits for a longer period of time, you have to
Hmm.
just focus on that. What governments are saying, what's happening with the economy, what will happen today, tomorrow, you just can. There are so many variables that you'll not be able to
Hmm.
focus on. So we
Yeah.
100 crores of asset, and I am not ashamed of saying that we don't do all these macro analysis or these gyan. We don't
Yeah.
believe in that. And we tell that to our
Yeah.
investors. If you're not comfortable, if you talk to me, you ask me what will happen to the markets because of Russia, Ukraine, I have an answer. I don't know. If you're not comfortable, don't invest. Because I don't
Yeah.
want to frame a view on that. I don't want to frame a view on what Jerome Powell would do with the Fed policy and what impact it will have on markets in the shorter term. Because in the longer run, I'm sure that the alcohol consumption is going up, right? And in the longer run, I'm sure that the renewable energy production is going to go up. In the longer run, I'm sure that a lot of Indians would buy more homes, and hence we'll have building products which would be sold more. More furniture would be made out of MDF rather than ply, because MDF has become a matter of choice for startups and people living in cities, because they want cheaper and more versatile furniture. I'm more focused over there than anything else.
Got it. So Arvind, what's your view on the new age tech IPOs that are coming up? Zomato, Cartrade, Paytm,
See, Buffett once told, Buffett once told, if you cannot explain your investment to a 9th grader at school, that investment is not worth to do it. I mean, you just take these companies and you just try to explain it to yourself, forget about anyone else, then how these companies are going to earn cash 5 years, in fact 10 years out. And if you get an answer that I can't figure it out, then they are not worth investing. See, what I'm trying to see, it is something which I might have an handicap. I'm not able to understand. You might be able to understand. Invest only in companies that you're able to understand how they will earn cash flows, right? For example, Amazon proved that it can earn cash flows over a longer period of time. It can make business out of a startup, which surprised globally to all big investors. But there have been very fewer examples. We don't have a proven track record of a lot of these new age businesses. See, what you should do is, if you want to look at new age, new tech, you should go and take companies which are solving some part of a business which is generating cash flows. For example, there's a company called Go Colors, which is manufacturing a simple product, which is women leggings. Now you just imagine a simple product like women leggings, but the focus of technology, of finding markets and positioning the brand in terms of it's a positioning in near malls and tracking data and using that data to open new franchises and almost becoming a single largest brand. Go Colors, I guess, synonymous with leggings, using high tech for its sales. At the same time, it's not at the end where its business model can get disrupted because there's a new player who would be do that. Nykaa, for example, can be, its valuation is very high, but Nykaa, for example, is using consumer products and having a very good tech at the end. So you should understand how rather than going for businesses like fintechs, which you don't know what was going to be their end, you can say, goal of having a large platform and what they're going to earn eventually. CDSL is a fintech company, which people don't understand. The more financialization of savings in India, the more Demat accounts. In fact, the number of products going to go to Demat are going to increase. We only have shares Demat. School certificates would be dematerialized. Your property papers are going to be dematerialized. This is what the government has planned. So that's also a fintech. No, you have to change your lens.
Yeah. But Arvind, like for people like us, right, to sort of like in the working class, we sort of think like, hey, we're going to invest like 10 to 20% of our maybe salary, right? And so what should be like the ideal allocation strategy for us? Like, hey, invest itna percentage to small cap, itna percentage to mid cap. So what should be the ideal strategy?
So very good question. I guess one thing that everyone should do is have allocation to an index fund. Forget about small, mid, whatever. Index fund is a simplest of way, the least cost if index that you can buy. You can save at least 2% commission, and that 2% gets added to your profitability, right? So that is what one thing you should all do, have a regular SIP in a index fund, right? Apart from that, if your age is in the bracket between maybe 30 to 40, 45, in fact 40, 42, I'll not go till 45, you should have a higher allocation to small caps, because you can afford and have a longer term time horizon, right? At the age of 50, 55, you cannot see, this I tell to a lot of students where I take sessions, that if you like a girl, you have to propose during college days, right? After your marriage, you cannot. There is an age to do things. So if you're young, you can afford. In fact, people take it. So I meet a lot of these young people, and they want to go and buy in large caps. This is the stupidest of thing that you can do, because the age is on your side, and you have smaller capital when you're young, right? You can afford to lose it when it's small. You cannot afford to lose it when you're approaching your retirement and the capital is so large. So this is an experimental age. Invest more in small caps, invest more in niche businesses, read about businesses, read 5-10 annual reports in a year, which will take a weekend, 2 hours reading, not much more than that. Know about brands like a Radico, know about businesses like CDSL. Here, there, if you read properly, you will find certain good companies, and just allocate more money to that. Don't follow that traditional matrices. Ke itna percent isme itna percent. I have seen people make money by making disproportionate allocation to small companies when they are young, the companies also and themselves also, rather than going the other way, playing it safe when they're young, right? So I'll recommend, as your age goes up, you reduce your allocation to these small, and then eventually go to maybe a government debt fund also, because that'll give a fixed return. Initially, if you don't build a portfolio which is geared for growth, you're not going to make a retirement corpus which is going to suffice you over a longer period of time.